8.30 trillion rupees. That's the wealth loss that investors suffered last week amid a troika of decadal high US bond yields, volatile crude oil prices, and seething war in West Asia. The frontline S&P BSE Sensex crashed 1,615 points in just 4 days to end below 64,000 levels. The NSE Nifty 50, meanwhile, settled near the 19,000 mark after breaching the psychological level briefly during the week. Among the broader indices, BSE Midcap shed 2.4% and the Small Cap 3.4%. This sell-off was accentuated by foreign investors who have sold stock worth over 25,000 crore rupees thus far in October. This comes after selling worth over 47,000 crore rupees in the preceding 2 months. The question now on everyone's minds is if there is any respite in the near term.
The CBOE VIX, the index of volatility, is about 23 now, and therefore volatility will continue for some more time. Since the geopolitical situation is highly uncertain, it is difficult to say that the market has bottomed out, but it appears that the markets have been oversold.
Analysts fear the US Federal Reserve's lightly hawkish tone in the upcoming monetary policy could keep a lid on any pullback gains.
But they have not yet indicated to pivot anytime soon until the inflation numbers start cooling off. The US economy grew at the fastest pace in nearly 2 years, which continues to pose a risk for higher inflation to continue. So although the Fed might not hike interest rates in this upcoming policy meet, but markets would be keen to hear the commentary by Fed, which would provide more clarity on path ahead.
Technical chartists, too, see markets consolidating after the recent correction.
On chart-wise, we should expect some consolidation. Nifty, 19,250 and 19,500 would play a very, very important resistance for near term. Whereas on the lower side, 18,750 and 18,500 would play some support. On the Sensex point, 63,000 round figure. This will be a support. Anything below that, we would see 62,300 on charts. And on the higher side, we would find some resistance in the range of 64,400 to 64,800.
Against this, what should be your trading strategy? According to VK Vijay Kumar of Geojit Financial Services, long-term investors may consider cherry-picking stocks from the banking and automobile space as valuations are turning fair. Clearly, uncertainty continues to close market sentiment with the US Fed policy, global cues, and India Inc.'s Q2 earnings being the key drivers. This week, nearly 500 companies are scheduled to report earnings, including Bharti Airtel, Larsen & Toubro, Hero MotoCorp, Sun Pharma, Tata Steel, Adani Enterprises, Tata Motors, Titan, and SBI.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.